Guys, the worst possible thing with FOMC happened. Like it really couldn't have been much worse. So we got the interest rate decision, 25 basis points unchanged. And that was the most probable scenario, 96% chance, according to the CME FedWatch group, that interest rates were going to remain at 25 basis points. So it wasn't a shocker, right? It would have been amazing to get 50 basis points to kick off altcoin season, but you just can't have everything in life. So we got 25 basis points, but then you go into another subcategory, right? You can get a hawkish 25 basis point cut and you can get a dovish 25 basis point cuts. The difference between those two are that if you get a dovish basis point cut, at least the Fed would then signal to you quantitative tightening is ending and then QE is ideally starting soon. For those of you that don't know what QE is, the yellow line that you can see on my chart represents the Federal Reserve balance sheet, or actually the global liquidity, but 80% of it is made up of the Federal Reserve balance sheet. And when liquidity goes up, i.e. there is quantitative easing, i.e. the Federal Reserve is buying up treasuries and buying up assets, you tend to see an explosion in risk on assets like what happened in the previous cycle. So if Fed Chair Powell would have said, okay, we've cut by 25 basis points, but the Fed balance sheet is going to start accumulating assets quite soon. He mentioned, I'm checking my notes now, he said that, well, yeah, QT is happening, it's continuing, but, it's going to end potentially soon. However, there is no specific macroeconomic importance to it at this moment in time, which means that QE isn't here, which means that altcoin season, my analysis on it has not changed. I just don't think that we're not going to see what happened in the previous time. But arguably, the most important thing that he mentioned was that we're probably not going to get the same boom and bust cycle of interest rates getting cut vigorously. So if you go to 2020, obviously you see rates getting cut massively. In the financial crisis, huge cuts after a huge increase. Same thing happens in the dot-com bubble. And basically since 1995 to the dot-com bubble, there wasn't a period where the Fed increased rates and then kept them stationary with a few cuts and then pushed them back to the upside. So there hasn't been much of a extended stationary interest rate period, basically since the 1995 to dot-com bubble era. And today we got the revelation that, first of all, inflation, to reach the 2% target, it could take up to 2028. And also, when you go to the Fed dot plot, the 2027 expectation of interest rates is currently sitting at about 3%, over 3% actually. And that would mean for another 2 years, you would not see rates get cut dramatically. I lost the chart now. Where was it? Where was Carl's? There it is. So basically, for another 2 years, you would linger on just like what you did in the 1995 to dot-com bubble era. And out of curiosity, I checked what was the S&P doing in this era. We can't look at Bitcoin and see what it did in 1995 simply because it just, Bitcoin didn't exist then. But we can look at the S&P, which is very much correlated with Bitcoin. See, look, 1995. You look here. All right, we can plot the Fed funds rate to visualize better. So this was the point where they started. Okay, so this was the point where they reached high interest rates and then they dropped it. But then look, in the period of stationariness, the stock market keeps on rallying to the upside before in the dot-com bubble capitulating. Now there is one difference to that cycle and this cycle. It's just when you look at those 4-year economic cycles, I guess 1995 was sort of the start, so 1995 stationary period would have been around the start of the bull market. The bull market has already been running for the past 3 years. So that's the difference. But my conclusion is if rates do something like this for like 2 years and then you see a downturn, it's very much possible the stock market keeps on rallying, not with the same momentum, but less momentum, and then in 2027 sees a massive decline. So what does this mean for Bitcoin? Well, what that means for Bitcoin is we could see the idea of not super cycle, but a double bull run. Okay, and a double bull run would just basically mean that you're ascendingly increasing to the upside, not in a very steep way, but in a more slanted way. And then you see an extended bear market. That's what could happen. And what does that mean for altcoins? Well, it just means that we're not going to get banana season potentially until that point. However, altcoins will also tend to the upside. So what's the play here? I think if you're a Bitcoin holder or if you're Bitcoin savvy, the play is, if this is the scenario that turns out to be true, I think the play is to just constantly DCA into Bitcoin, because then your returns on a daily basis will compound. So that's what I'm looking at. I know it's pretty shocking, but that could very much end up being what takes place. And it's gonna be interesting to see. So we're just gonna live and learn. We post daily analysis here, so we're gonna track it for however long it takes for us to reach altcoin season. But with that said, that's a wrap for FOMC. I hope you enjoyed the stream, because we streamed it on the Moonshow channel. And I hope you enjoyed this video. So guys, take care. Tomorrow, I'll be in a different country. I'm very excited. Azerbaijan, I've never been before. And I'll be making my video and show from there. So guys, thank you so much for watching. Take care. And as always, bye-bye.